So thank you so much for taking time out of your schedule to meet with me. So what I do with my company is we help protect people from two things: living too long and dying too soon. Now, living too long may sound a little crazy, but you've seen it before and may not even realize it. That's when somebody outlives their savings for retirement. So anytime you're seeing someone who's a senior citizen working at Walmart, delivering pizzas, things of that nature. Now, granted, some of them are doing it because they don't want to be bored in retirement to keep them active. But unfortunately, some are doing it because they have to. And the two main reasons I believe that's so is because either they never had a financial game plan in place for retirement, so there was no money there, or they had an improper financial game plan in place for retirement and they ran out of money while they were still in retirement years and had to go back to work. The second way that we help protect families is against dying too soon. Now, when someone dies too soon, that's when someone passes away in their prime money-making years, but they left loved ones behind that were still dependent on their income. Now, here's the thing, Audrey's. 92% of African Americans are dying without any life insurance coverage. And there's two main reasons why I believe that's so. Number one, they thought they had more time. Oh, I'll think about it. Well, let me do some research. Well, I'm young right now. I don't need any coverage right now. Putting it off until some time in the distant future. Or number two. And number two, there's two main reasons within number two. Number two, they may have had coverage at one time, but they let the policy lapse. And when the family needed that money the most, it was not there. Or secondly, they had coverage through their job. And they thought the job was going to take care of their family at the time of their demise, and unfortunately that was not so. So Audrice, what I do is I educate families on a very simple concept known as DIME, D-I-M-E. Now the D in DIME stands for debt protection. Right now, the national average for final expenses is about $15,000. May I ask what coverage you have in place for your family for the final expenses?
I don't have any right now.
Okay, not a problem, but that's why we're here. We can have a conversation about that in a few moments. Now, the I in DIME stands for income protection. So let's say someone makes $2,000 a month, right? That's $24,000 for the year. If that person dies too soon, where is that family going to get those $2,000 for the month? Where are they going to get those $24,000 for the year? Because no matter how great of an employee they may have been, that company's not going to continue sending that money to their family, right? So what we do is we help that family be able to transition from life with you to life without you. And that's usually a 10-year grace period that you want to allow for. So if they make $24,000 for the year times 10 for that grace period, that's now $240,000 of income protection that that family needs. Now, could we agree, Audrice, that this family is emotionally devastated at the loss of their loved one? Now, question, how much more devastated would they be if 90 days later, there's a knock on the door from the bank saying they need to foreclose on this home due to failure for payment? So we need to protect the roof over our loved one's head as well. So let's say they still owe $100,000 on that mortgage. And then lastly, the E stands for education. If I have clients that have small kids, I always ask them, hey, heaven forbid, if anything were to happen to you, what percentage of your child's education would you want taken care of? And they typically always say 100%, right? Well, when you include books, fees, room and board, all those fees associated with college, that can easily be another $100,000. So Audrice, the family in this example, they would need about $455,000 of life insurance protection. Now, question, that seems like a whole lot of life insurance, don't it? Mm-hmm. But let me ask you this. Let's say this was your family situation. What on that list could your family go without?
Nothing.
You need all of it, right? That's why it's never a question about whether or not somebody needs life insurance. Everybody needs life insurance. The question is, can you afford life insurance coverage? So showing somebody that they need $455,000 of life insurance protection means absolutely nothing if they can't afford it. So that's why with my company, I always give my clients three different options. So let's say option number one is for the full $455,000 of coverage. Don't forget me, Janice. So the first option is for the full $455,000. We put that amount on the primary and the spouse. And let's say we also put $25,000 on the children. And let's say that first option is $150. The second option, we reduce that coverage sum to $250,000. And let's say that one is $98 a month. And then the third option is a starter plan. Let's say that one is about $100,000 of coverage. And let's say that one is maybe $65 a month. Because here's the thing, some coverage is always better than no coverage. Would you agree? Now question, have we positioned ourselves to be affordable for that family? Absolutely. So now, once I give that family those three options, I'll let them know, excuse me, ma'am, sir, which of these three options gives your family the most amount of coverage at a price that you can afford? And then they choose one, right? So, Audrey's question for you, do you have a life insurance license?
No.
All right. Well, was there anything complicated about what I just shared with you?
No.
I'm sure if I gave you the pen and pad, you can do the exact same thing, right?
No. Yes.
Well, let's say, and you say you don't have a life insurance license, right?
Not yet.
All right, well, hopefully you'll change your mind by the end of this conversation, okay? Let's say you were the agent that instructed that family on how the dime works, and you gave them these three options, right? And they chose option number one, right? Let's say it took you 30 minutes to go over the presentation, get their application for coverage, and pick up that check for $150. For 30 minutes of your time, what would be a fair amount for the company to pay you for picking up that one check of $150?
Let's see what everybody has been saying lately. About $25, $50.
Okay, $25, $50, all right? Now, for 30 minutes of your time, would that be a bad payday?
No.
Okay, because when you think about it,
It's more than what I make hourly on my real job.
there you go, exactly. But see, Audrey, here's the thing. I didn't schedule this time to sit down with you to have a $50 conversation, okay? What the company is gonna actually pay out is about $1,800. The question is, how much of that $1,800 are you gonna get paid? Well, as a brand new rep, brand new, just got licensed, you're gonna make about $400 for picking up that one check of $150. Now, if you thought $25 to $50 was a good payday, how would you define $400?
A lovely day.
Lovely day, right? Well, in our business, we also have a person known as a broker, just like in real estate. Now, the broker is going to get paid the difference between what you got paid and what's left over. So the broker is going to make about $1,400. Now, are you mad that the broker made $1,400 and you made $400?
Not really, no.
Not really, right? But let's say you were the broker, and let's say I was your agent, and I went out and helped that family. I made $400, and you were off on vacation, enjoying time with your family, whatever the case may be, and you got a notification saying that a $1,400 deposit was going to hit your bank account. How would that make you feel?
Wonderful.
Wonderful, right? But here's the thing. Let's say you're a smart broker, which I know you would be. You're not going to have everything riding on just one agent, right? You want multiple agents out there. So let's say you had 9 other agents like me, and for the whole month of January, we each only picked up one check of $150 a piece. Audrice, your bonus would go from $1,400 from just one agent to $14,000 for the month. What would you do with a $14,000 paycheck coming every month?
Whole lot.
Whole lot. What would you drive?
Something nicer than what I have now.
Okay. And where would you live?
Somewhere different than where I
So,
live.
somewhere different than what you live now, right? Great opportunity, right? But Audrice, there's one problem. You can't benefit from any of that compensation. But do you know why?
No.
You don't have a life insurance license.